In a world where markets are shifting fast and uncertainty feels constant, real estate remains one of the few asset classes that offers tangible security, long-term value, and diversified cash flow. But in 2025, smart real estate investing isn't just about buying property, it's about buying the right property in the right country with the right strategy. At Scube Wealth Grid, we're diving deep into the most powerful global real estate investment strategies that forward-thinking investors are using right now, and where you should be looking to invest for optimal returns and risk-adjusted growth. Let's start with the big picture. The world economy is navigating high interest rates, tightening credit, inflationary pressures, and geopolitical tension. In this environment, real estate markets across the globe are no longer moving in unison. Some are overheating, some are crashing. Others, quietly, are entering once-in-a-decade buying zones. The key is to follow macro trends: currency strength, population growth, infrastructure investment, rental demand, taxation, and visa regulations. This is how global investors build property portfolios that are resilient, diversified, and future-proofed. So, where are smart investors putting their money in 2025? First, Dubai remains one of the hottest global markets, driven by zero income tax, political stability, massive infrastructure development, and a wave of global millionaires relocating for lifestyle and tax reasons. With yields between 7–10% in prime areas and strong capital appreciation, Dubai is attracting both HNIs and mid-tier investors. Short-term rentals are booming, and government incentives like the Golden Visa make it even more attractive. Second, Lisbon and other Portuguese cities are seeing renewed interest post-Golden Visa reform. While some visa pathways have tightened, Portugal's real estate remains highly affordable compared to other EU nations, with strong lifestyle appeal, Eurozone stability, and access to EU residency. Coastal towns and historic centers are particularly popular for short-let and lifestyle investors. Third, look at Southeast Asia, specifically Bali, Thailand, and Vietnam. Bali is transitioning from a tourist hub to a remote worker haven. Thailand offers dual income strategies through condos and villas. Vietnam, with its rapidly growing middle class and GDP, is emerging as a long-term growth market. While some of these markets are restricted for foreign ownership, clever structuring through long-term leases or local partnerships can unlock opportunities. Fourth, the US remains a cornerstone of global property investing. But in 2025, the smart money isn't just buying in New York or LA. They're targeting secondary cities with strong rental demand and tech-driven job growth. Think Austin, Raleigh, Tampa, and parts of Ohio. With falling prices and a potential rate pivot later this year, this could be a rare entry point for international buyers. Real estate in the US also opens the door to EB-5 visas, offshore asset protection, and dollar-denominated income. Fifth, India is re-emerging as a domestic growth engine, with urbanization, infrastructure mega-projects, and a rising professional class fueling demand in Tier 2 and Tier 3 cities. For NRIs and global investors, Indian commercial real estate, especially Grade A office space, co-living, and warehousing, offers high yields and institutional interest. While currency depreciation remains a concern, high rental income can often offset it. Now let's talk strategies, because choosing the country is only step one. Smart investors in 2025 are deploying multiple layered approaches: yield arbitrage, buying in low-cost markets with high rental yields to maximize cash flow; citizenship and residency leverage, targeting countries that offer golden visas or investment-linked residencies; currency hedge, diversifying into USD, EUR, or AED-backed assets to balance INR exposure; short-term rentals, monetizing tourism rebounds with Airbnbs and serviced apartments; joint ventures and REITs, reducing capital burden while still gaining access to prime markets. And let's not ignore tax structuring. Holding international property through offshore companies or trusts can dramatically reduce estate taxes, provide legal protection, and simplify inheritance. Countries like the UAE, Singapore, and Mauritius offer robust structures for Indian investors looking to shield their global assets from local taxation. But remember, real estate investing isn't one size fits all. It depends on your goals. Are you seeking cash flow or long-term capital appreciation? Are you investing for a second passport or building a legacy portfolio? Are you diversifying currency exposure or securing an offshore income stream? The answers shape the entire strategy. In 2025, the most successful global investors aren't chasing trends. They're analyzing cycles, zoning laws, financing terms, and taxation frameworks. They're building global real estate portfolios that earn while they sleep, while reducing risk from any single country, market, or currency. At Skube Wealth Grid, we bring you the insights, tools, and frameworks used by the top 1% to grow their wealth globally through real estate. From on-ground sourcing to legal structuring and portfolio balancing, we decode the game so you can play to win. Subscribe now and stay tuned, because your next property might not be down the street. It could be across the world.